Good morning. Good morning, dear students. The third class for the Professional Code of Conduct. Today we will be discussing the second schedule and some guidelines given by the Council, the Institute of Chartered Accountants of India. Just to reiterate, I am presenting this particular slide to you. We had discussed, just to summarize that till day before yesterday we had discussed the first schedule up to the first schedule, important things about first schedule and to second schedule we are discussing, from where you are expecting questions, form of case studies. So we have discussed the first schedule, which you know that it has 4 parts, the part 1, part 2, part 3 and part 4. Part 1 talks about the various clauses of misconduct for CAs in practice. Part 2 talks about clauses of misconduct for CAs in service. And the other part, the part 3, talks about the general misconduct, professional misconduct for all the CAs. And part 4 talks about the other misconduct, which are not necessarily related to professional misconduct. Alright? Today we will discuss the other schedule, which is the second schedule. This is more important. This is very, very important in the sense that these are all related to the work that a professional in practice carries out. And naturally, one has to be very, very careful about the clauses. For your exam purpose also, this carries a very lot of significance. Okay. So again, we will start memorizing, because we have to memorize the schedule. Remember? So how do we memorize? So it has 3 parts. First thing, you remember that it has 3 parts: part 1, part 2 and part 3. Secondly, it doesn't talk about the misconduct specifically for those who are in service, unlike in part 1, where there are separate clauses for members who are in service. Second schedule doesn't talk about anything like that. So it talks about the part 1, there are 10 clauses which talks about the misconduct for CAs in practice. Specifically CAs in practice, there are 10 clauses which we will discuss in great detail with case studies and examples. Many times live examples which I experienced. And part 2 talks about the misconduct for the members, including the members in service and as well as members in practice, of course. And part 3, as usual, it talks about other misconduct. Okay. So 3 parts in second schedule, nothing to do with specifically with members in service. Part 1, 10 clauses, talks only about misconduct on part of the members in practice. Part 2 talks about misconduct part of the members in general, and part 3 talks about the other misconduct. So keep this in mind. Keep this chart. I hope you students, you have prepared a chart like this. Sorry. Yeah. So we will be talking about this. Right? So now we need to remember, like in the previous classes that we have discussed, which is very important that you need to remember which clause is having what. So certain keywords I'll give you. Part 1, 10 clauses. Clause 1, disclose. Please remember the disclose part. Remember this. The word discloses information acquired in the course of his professional engagement to any person other than his client, so engaging him without the consent of his client or otherwise than as required by any law for the time being in force. What does that mean? That you just cannot just like that you cannot disclose what you are doing in your client place. It is absolutely confidential. it is confidential and it is on good faith. They have to, because you have to conduct your professional duty as an auditor. Okay, in whatever capacity. It could be statutory audit, it could be internal audit, it could be tax audit, or any, whether you are giving certificate or anything like that. The client has shared information with you and it is confidential in nature. So that's what the members need to, in practice, need to remember. The information shared by the client with them, they are confidential in nature and they are not supposed to be disclosed in the public domain. Every Tom, Dick and Harry won't know about such information unless and until it is absolutely necessary. Where it will be necessary, where it is not necessary, and will be termed as misconduct, we will discuss in detail, in somewhat detail. Alright, so please remember the word discloses confidential information. So what do you mean by confidential? In any information which your client is sharing with you for the purpose of executing your professional duty, they are confidential in nature. You are not supposed to. That's the first thing a member should remember. Everything that is being communicated between you and the member and the client, they are confidential in nature. Remember, I had been telling you that generally today's world, what happened? We sign a non-disclosure agreement, and there are strict, statements written for that non-disclosure agreement. What are the penalties if we do not comply with such non-disclosure agreement? They can take us to the court of law. So that's the worst punitive action that can happen for a member in practice. So one has to be very careful, and it is not only about me as a partner in the firm or other partners in the firm, because we are not working alone. We are using the help, assistance of our audit staffs, the audit clerks, qualified staffs, non-qualified staffs. So they have to be also careful about it, and we need to teach them. We need to make them aware that we are sharing information with you, or you are getting information from the client directly. As you are working in their client's place, you have to be very, very careful that you do not share and disclose information which you have gathered only for the purpose of conducting the professional work. Okay. So there are many things happens today. You should not be carrying, you should not be copying, you should not be, taking pictures. At some point, at times it is important that we do not have, because we need to have documentation in place, which you will learn subsequently when you go for the chapter 1 for, account auditing standards and all. We need to document. How do we document? Today you do not have everything a physical paper. All right. Just imagine the situation today that we are going through. We do not have physical paper. All records, all data, all information that are required to carry out our professional services are shared over emails and things like that. So it is in our laptop. It could be in the staff's laptop. So one has to be very careful. That's the reason why people are slowly and surely they are moving into the cloud, so that we keep in one place and we do not download in our own machine. Many times it happens. The worst part is that if you inadvertently, without your knowledge, you are sharing, some critical information, confidential information, client's information with others unknowingly, inadvertently, unintentionally, then there is a major problem. You don't know that you have shared, but you are falling under the misconduct. Knowingly, if you do, that's a separate issue altogether. That's of course that's a misconduct, but you are knowing it. So probably before it becomes too late, you can do some damage control. But if it goes out of your hand without your knowledge, that's very dangerous. All right. So one has to be careful to take from the member's point of view, from the firm's point of view, certain precautions must be taken. Okay. So now what are as I said, that there will be cases where they can be disclosed, as we are saying, that we can disclose information if it is required by the statute, if it is required by the law that are enforced during the time of our work, professional work. Now, it may so happen that the work is such that we need to report to the statute. So by default, by virtue of the scope of our work, scope of our assignment, we are disclosing. So there is no problem. But otherwise, suppose we are doing statutory audit, we are doing internal audit, or we are doing some certification job. Can we we come across such a situation, can we disclose it? There are clauses, there are rules. There are guidelines given by the institute. So let's look into this. That second point is that if we have to disclose at all, something has happened, and somebody, the court of law or someone has asked for the information and it has been allowed. It is allowed by the guidelines, and it is also allowed through our non-disclosure agreement that we can share, but we cannot do so without the consent. Without the consent of the client. The data is actually with us, with the member, but it is not your data. It is client's data. So whatever the reason may be, whatever the case may be, we need to take their consent, and then only we can share. Now, who can give the consent? In case of a company, board of director can give a consent. Board of director, if they have empowered the managing director, he can give the consent to the auditor to disclose certain information. Or if no such, power is given to the managing director, resolution has to be passed in the board for giving such consent. So please keep this in mind, that if we have to take a consent from the client, without which we should not be disclosing certain information, even if it is required by any statute or any law prevalent during that point of time of our audit, we have to take a consent. Okay, unless and until we are reporting directly to some statute. Please, students, keep that in mind. Where we do not have to take a consent, you must be very, very careful. These are thin lines, where you can go wrong and where you should be right. Where you do not have to take a consent, we are directly reporting to a statute. We are not reporting to the client. We have got a job where we are reporting to the client. I'll give you an example. The bank has appointed you. You are empaneled with a bank, and bank has appointed you to do some audit. It could be a stock audit, or it could be any other investigative type of audit. Some kind of an audit, some kind of a certification they have given you. The bank has given you. The auditee here is the bank, right? And you have gone to a place of a client where you are getting information. Who's giving the information? Bank is not giving you the information. Information is giving by by that company who is not actually directly your client, right? But you're getting their information. You can share, you are going to give the report directly to the bank. Or if the court has appointed you, to the court. There you do not have to take consent from the client who has actually given you the information, right? So that thing you must keep in mind. Or the company itself has got a order from some statute, and by virtue of which they have asked an auditor to give some report, some certificate, and it is written that you can directly send the report or the certificate to that concerned authority. There also you can send directly. Of course, a copy of such report or the certificate will be shared with the client, but we can directly send it to the authority on whose behalf actually, who has sent to the client that this certificate or this report is required from a professional, from a certified or who is practicing chartered accountant. Many times it happens that you get us a certificate, and that certificate should directly go to the authority who has asked for such certificate or report. Why I'm using the term certificate so many times? Because doesn't matter whatever it is. It could be a report, it could be a certificate. It doesn't have to be only a report. Last time we discussed the difference between the certificate and a report. I hope you remember that. Okay, so that's the difference. But other than this situation, we cannot disclose without the written consent from the client. And it is always good to have a written consent. Why, students? We have to have documentation. Tomorrow, if your client, disowns that, no, I didn't give you such, I never gave you such consent. Why did you disclose? And they go and they take you to the court of law. Where do we stand? We need to have a proof. So it is always good to have, a written consent. Today, Information Technology Act has allowed that email is accepted in the court of law. It is good to also take the consent through emails. All right. but we have to have a written consent. Is it important? So now this is that we have to take consent before we disclose. What we cannot disclose, what we do not have to disclose. There are certain things which we do not have to disclose. What are such things? Like one of the examples, working papers. We do not have to disclose the working papers. It is not mandatory. No one can force us to, share our working papers with others. No, not even the client. Not even the client. The client, we do not have to share our working papers with the client. We do not have to share our working papers with other authorities who are asking for such report or certificate. We do not have to share our working papers with the joint auditors. Joint auditors, many organizations, depending upon the size and the complexity, they decide on joint audit where more than one auditor is actually doing the statutory audit of a client. Say in a bank. Giving an example of joint audit is a bank. Classic example, right? Joint auditors. I'm talking of central statutory audit. Alright, branch audit is separate. You are the only auditor, single auditor of a branch. Not to confuse that. Alright, I'm talking of the central statutory audit of a bank. Yes, we will come to that, Ranjit. When fraud happens, yes, we will come to that. We can directly report. There is no bar on that. We can directly report. But there is no harm in, but we have to tell that we are reporting. All right. One has to be careful about the consequences. We should not work on the basis of, that we have identified something. You have to be very careful. At least we send them a mail that, this has happened and we are sending even 143 talks about, 12 talks about that also, right? So yes, we can disclose. So we'll come to that when we come to the clause relating to the fraud. So in a joint audit of a bank, where you are an auditor along with other other auditors, it is not necessary, and you're responsible for your own part of the allotted work. You don't have to share information, your working papers, working file with, other joint auditors. You may, if you wish, you may, but there is no hard and fast binding on a practicing chartered accountant to share. So we do not have to disclose, right? Disclose, as you rightly said, that in case of fraud, as Ranjit, as you said, that in case a fraud happens during, and has happened, and as an auditor, it came to our light, it came to our knowledge during the course of our audit. We do not have to wait till we give the report. And it is of serious offense. It could be of a serious nature. We have to immediately, there is a clause that we can immediately report it to the, to the authority, to the central government. To whom do we do that? To the MCA. Okay? Ministry of Corporate Affairs. We should be writing, we should be writing. We can disclose such things within 60 days, reporting to the fraud. Now, within 60 days, that's what I was trying to tell you. 143/12 talks about that within that 60 days, first 15 days, it is given to the client that please tell us, do you have any comment on this? You wait for a certain period, and if they do not answer, then you straight away report it to the central government. So that entire period of talking to the client, taking their views, waiting for them to give their answer, and then reporting is 60 days. Keep that in mind. And they also talks about the quantum of the, such fraud. There we will come that, if it is more than 1 crore, very clearly the, Companies Act has defined, and that has been adopted in our guidelines here, that if it is more than, if you unearth the fraud during the course of your audit, the quantum of which is more than 1 crore, you have the right, and ideally you should, with the consent of the client, disclose it to the central government within 60 days. When we are saying that taking the consent, you just tell them that do you have an answer? It is not mandatory that we have to wait for their answer forever. No, that's what the Companies Act has given us the right? That you tell them and you wait for a sufficient period of time. If they do not answer, the Companies Act has given us the power to report it to the central government within the 60 days, and the client should be also knowledgeable about it. They should be also knowing it. So we are safe that in case such thing happens, you straightway within 60 days report. What happens if the quantum of the fraud is less than rupees 1 crore? Then you don't have to give it to the central government. You do not have to report it to the central government, but you can give it to the company, the audit committee. The audit committee you should be reporting it to, that there is so and so things, such and such things have happened, the value of which is less than 1 crore. Okay, there is no need. I have a separate slide for what are the things that is allowed to be disclosed and not allowed to be disclosed. If required as part of performance of professional duty, yes, we will disclose. In other cases, we need to take a consent and then only we can disclose. Working papers, we don't have to disclose. Fraud, yes, as you rightly pointed out, Ranjit, we have to disclose, and I just tell you what are the steps that we need to follow. Companies Act has given it very nicely by section 143 subsection 12, and we need to follow that in case of companies. And tax fraud, there is tax related. If something you have found out, like, what do you mean by the tax fraud? Some question I'm seeing. What is that? Satrudhan? Yes, that's what we discussed. Good. So what is a tax fraud? In case you have identified of evasion and things like that, there is no need. There is no binding need on a professional to disclose it unless and until there is a small catch here. Unless and until you see that such fraud will have a prejudice that the tax will not be paid because this company is disposing of the assets of the company. They're disposing of their assets, and naturally after, if you do not disclose, there wouldn't be enough money. They become insolvent later on probably, and they wouldn't have enough money, and the income tax authority will not be able to recover such tax. If you feel professionally, if you feel that can happen, you can of course disclose it to the tax authorities. Otherwise, you don't have any binding rule that you need to disclose if you feel that that they have not paid tax related to current previous year or things like that. Okay, time to disclose. When to disclose? That's very important. Point number 7. That where do you do it immediately, or you do it later as part of your report or part of your return? One has to judge. Suppose you come across such a situation during your tax audit that tax has not been paid. You do not have to, there is no binding, as I said, that you have to report it immediately. You can wait. Through your income tax calculation and all, it will come to know. The calculation will tell you that how much is payable by the company. But you at the same time, while doing your professional work, for preparing the tax return before you file, you see that the client is disposing of the assets, and then you immediately know that he is trying to evade because he is disposing of. Later on, it won't be recovered. So, that point of time, it will be good to immediately inform the relevant authorities of the situation in the client. Okay? Keep that in mind. So, thing is that we should not be taking side of the client where such things are happening, but there are certain guidelines that it is not binding on us that we need to report all the time. Okay? Okay. Employment of the member is dispensed with before, where there is it is not binding. The last one, that because we were working and we encountered certain frauds, and we discussed with the client says that your service is not required. That's what they said, and we are dispensed of. We are removed. So then it is not binding on us to report. Okay. Employment of the member is dispensed with before the accounts are completed or are reported on or the return is submitted. They said that you don't have to report. I didn't sign the auditor's report and the balance sheet, profit and loss account, or if I am doing a tax audit, I didn't prepare the return and submit it. Okay. And I didn't submit the report, the return. Before that, if I am removed, it is not my responsibility to report it to the authority. Whoever comes in or whoever does it, it will be his responsibility. We will not be facing the, clauses under any of this misconduct. So keep that in mind, please. Okay, so that's about the disclosure, that we should not be disclosing. We should not be disclosing something, unless and until it is, we come across some cases of fraud and things like that. We should not be disclosing information out to the authorities, and definitely not to anybody like public at large. The first thing you should keep in mind from the student's point of view, for examination point of that we are not supposed to disclose information which are confidential in nature, subject to the fact that, 1 or 2, 1, 2, 3, 4 like that. What are the situations where we can disclose? Where we can disclose? If we are directly reporting to some authority, yes, we can disclose. If during our work we came across certain frauds and quantum I have told you, we have to disclose. Tax, if we see that, related to tax specifically, if you see that he is disposing of, you are supposed to disclose. He is suppressing facts, you can disclose, but definitely not to the general public at large. You cannot go and, for example, like you cannot go and publish in the newspaper. In the newspaper, you cannot just go and you make an anonymous call, or you make give your details and tell the newspaper agency that, this thing is happening. You please put it up in your paper tomorrow as a headline. No, we can't do that. We can't do that. All right. And what are the certain things which allowed us not to disclose? Like, we do not have to disclose our working papers. No one, it is not binding on anybody. Okay. And when we are talking of work, means all type of work, statutory, internal, everything. Okay. All type of work. Anything I'm missing? No. Okay. Like we are making the presentation. Like let me give you some more example probably for your exam purpose. Like say I'm talking to you now. Okay. And I'm talking to you about disclosure. I'm into practice. I have clients, but various type of clients, statutory audit, internal audit, certification, whole lot of type of work that we do. I cannot take the name of a client, I can give you a situation, I'm giving you life experiences, but I'm never ever taking the name of the client. Then I fall under the misconduct. Alright, I'm giving you my practical experiences, but I'm giving you the scenario. I'm not naming the client. So I'm safe. It is not falling under the misconduct clause of disclosure. Okay, which is clause number 1, part 1, second schedule. Keep that in mind. If you remember, students, I told you how to write the answer in the how to write the answer. First, you have to identify, right, clause, the part, and the schedule. Then you give the details of what that clause talks about, connect it with reference to the case study, and give your conclusion whether guilty or not guilty. All right. So when you prepare it for your exam purpose, when you are writing it in the exam hall, first you have to identify whether it is falling under guilty or not guilty, misconduct or not a misconduct. Then you write the full paragraph in these 4 blocks. Very important that you must write in 4 blocks. Okay? Okay, let's continue. The second schedule. The second clause. So what the second clause talks about? Clause 2, part 1, second schedule talks about that a member in practice certifies or submits in his name or in the name of the firm a report of an examination of financial statements unless the examination of such statements and the related records has been made by him or by a partner or an employee in his firm or by another chartered accountant in practice. So you see there are, so when you read it, you dissect the statement, this entire statement of 3.5 lines. Okay, you dissect it. That he certifies or submit. Certify is a certification, submitting is a report. So it tells you, so you, as I told you, you have to read it very intelligently. That means this clause is talking about all type of audit that we do, including certification. So that entire statement is meant within the 2 words, certify and submit. We certify a certificate and we submit report. That means all audits are, taken care of here. It's included here. So whatever audit we do as a chartered accountant in practice. Okay. So then what we do? We do it in our name, proprietorship firm, or in the name of the firm, partnership firm. A report of an examination of financial statements. Okay. Unless examination. So we give information. Unless the examination of such statement or related records have been carried out by either the partner himself or one of the partners in his firm himself or herself, or an employee of his firm, or by another chartered accountant in practice. I can take help of another chartered accountant in practice. Like I have a firm. There is a firm having so many partners, but nobody at that point of time, nobody is able to see the documents which the client is asking for a certification or a report. So I can take the help of a chartered accountant who's my professional colleague. I worked with him. I know him. And I ask him that since you were there in that location, could you just please, check the documents and let me know if they are correct, what they are asking for. He can do that. But please remember, he cannot sign. If the case study talks about such that, that I have got a job because I am not able to do the examination myself for whatever reason. Say location, it is in some place where I cannot go today. Okay, but I want to get it checked. I do not want to see the documents only through emails. I want somebody to go physically there in their office and review some underlying other documents also supporting that statement which I am going to sign. So I know a professional colleague of mine who is also in practice, who is stationed in that particular location. So I tell him, could you do that please for me? So he said, yes, I do that. So he goes there, he checks the documents, all right, supporting that statement which I am supposed to sign, and he tells me it's all good to go. And he sends me the documentation as per my requirement, and I review it. And what do? I sign it. He cannot sign it because he is not a partner in my firm. He is just a professional colleague, right? So I can take the help of another professional colleague only for the examination purpose. All right, that's all. Only for the examination purpose. But certifying signature part, we have to do ourselves. Why? Do you remember the last clause in first schedule? Okay, who will sign? Clause 12, part 1, first schedule talks about who can sign. Right? Keep that in mind. So that's the certification that we have to examine. We need to examine ourselves. Okay? And we cannot just by hearsay that or representation. The client make a representation. Yes, this is the figure I am sending you. Many a times it happens with us. I'm giving you practical experience again. I have to certify certain things which the board immediately needs. As I said, that certificates are always in a hurry. Rightly so. And so they call up and they say that could you please certify this? and we are in a hurry, you have to give it to today only. We have to present it to the board tomorrow. There is a board meeting. That's fine. And when I take from him the requirement that what I need to certify, I found that I have to check couple of things. I'm giving the example from where, giving you a particular example where I could not certify that. They said that, you have to certify certain figures, financial state, certain figures, which the resolution has been taken by some board meeting, agreed by the board of directors, and they are asking me to certify that. So as a diligent, carefully doing the job, what should I do with professional due care if I am working? I need to see actually whether the board of directors have actually agreed to it or not. So for that, what can I do? My only way to check the accuracy of what he is saying is the board minutes. So I requested them that could you send me only the relevant portion where they have permitted such expenditure, some expenditure while that board meeting. Could you only send me that part of the minutes? They refused. They said, you don't believe us. I said, there is absolutely I believe you, but I cannot go by such belief. I have some professional guidelines, some framework, certain things I need to follow, certain standard I need to follow, and that standard guidelines tells me that you need to review it yourself, see for yourself to believe it, and I need to document it. I don't need a copy of that. I went this much that I don't need a copy of that minute. I will just note it down. That's good enough. That I can, that is tenable in the court of law, any committee, anywhere. It is absolutely tenable. I will just note it down. You just show me that portion of the minutes. They refused. Then I said, I'm sorry, I can't do this certification. All right. So again, you see that threat and the safeguard. I had to go give up that job. So one has to be very careful about. So if such question comes that now the question comes like this, the case study, that the chartered accountant signed it on the basis of the client representation. All right. Is he guilty of misconduct? Yes, he is. Yes, he is guilty of the misconduct under clause 2, part 1, second schedule. No, we can't do that. We can't do that, right? Please keep that in mind. Yes, in some cases where we do not do some examination, the guidelines have also given some, some respite, some this thing, that like in case of a joint audit. As I said in first, we don't have to, in the first clause, that we don't have to disclose. So similarly in clause 2, in case of a joint auditor, we can rely on their work, right? We can rely on their work because we are responsible for only our share of the work. But please remember, all the auditors sign the balance sheet or the audit report jointly. The example that I took, the bank. Say XYZ bank, okay? A PSU bank in our country. Okay, it is being audited by 5 joint auditors. And you are the member in question is one of the joint auditors. So I will be signing the balance sheet, profit and loss account, and the auditor's report, and the various annexures that I have to, along with the other 4 joint auditors. But have you checked everything? No, I have that particular auditor A, who is one of the joint auditors of XYZ bank. He has not checked everything because it was not under his purview. He has done whatever work was allocated to him in writing. He is responsible for that, but he is jointly and severally responsible for the entire work which he is signing. So I am relying on the other auditors who are my professional colleagues without examining, without going through whatever the other joint auditors have done. Okay? You rely, a profession, say an auditor who is a central statutory auditor, they rely on the branch audit, branch report done by the branch auditor Do you again, would they go and again start auditing? No, that's not required. So which is given, by the, which has been allowed by clause 2, part 1, second schedule, that yes, we can rely on that, and we don't have to check, and unless and until, keep that in mind, unless and until something comes up which gives rise to some situation that he might have missed it, but it is just only one part of it you might see. It is up to your discretion, or it is absolutely up to the discretion of an auditor, to rely on the working papers of the other auditor. Okay, if he has some suspicion, he can always check, but he can rely on that, and he doesn't have to do any specific examination. Okay, because he is also professional. He is a professional colleague, and you know that he is also carrying out the audit as per the guidelines. So there is no reason to not to believe him. Okay. Any question? No question. Oh, question is there. Srinivasa, what you are saying, ma'am, is there a chance of likely to happen a big fraud which may be more? Srinivasa Reddy, there is a chance. No, it has happened. You don't report on the basis of that it will happen. It will happen. Don't know. We cannot do that. When it happens, we will do it. But if you have sufficient, now you are adding to it that you have a sufficient proof that it's going to happen, like he's disposing it off. That's what we are saying, that he is disposing it off. You have come to know, but it is fraud here. Probably you are trying to say that somebody is going to get out of the country. Get out of the country but he has already perpetrated a fraud. All right, and you have come to know of such thing, and the consequences now you see. Time has not passed, but of that 60 days, but you see that the consequence is that he may leave the country, or he may dispose of the assets. Yes, you can, but that the fraud will happen, this you don't have to report it to the authority. That you come to know of a fraud is going to happen. How will you come to know of it? Now the fraud has been done by whom? Fraud has been done by officer of the company. Who has done the fraud? The fraud has been perpetrated by the officer of the company. So how do you come to know somebody has given you, this time we will not do any fraud, we will wait, but you did the damage by for yourself by informing the authority, and it may come back as a threat. So one has to be very careful. Articles included in clause 2. Yes, articles are also in clause 2. Of course, we depend a partnership depends heavily on the article students. Of course, it is there. Okay. What is the difference between clause 12 of part 1 and part schedule? Okay, I'll come to that. Rahul, you have a big question. I'll come to that later. All right. I'll surely answer. Right. So it certifies. So you understand that the examination is important, that we cannot certify, we cannot sign a report without an examination. It is absolutely a professional misconduct. Part 1, second schedule. Next, third is permits his name or the name of his, so the accuracy, the key word here is the accuracy of forecast. Forecast, this is so misnomers. A forecast can never be accurate. It can be anything but accurate. Can you vouch for the accuracy of the forecast? You see examples. Just see, I don't have to probably give you examples today. You see how, because of the pandemic, all the forecast has gone everywhere. Nobody thought of it in the wildest of our dream or imagination. All right? And every day we are coming out. Every day the government is coming out with new notification, things like that. It has to be. And just see where the forecast has gone wrong. Can you blame anybody? No, you can't blame anybody. This What is that? The future today. Today is 29th. We do not know what's going to come tomorrow. So we think this is going to happen tomorrow. And what has happened in the past, we make a calculation and using our professional judgment and knowledge and skill, we give a forecast that is anything but accurate. Okay? Near accurate. Then you might ask madam a question, madam, why do we give a forecast if it is anything but accurate? Means exact. What I'm trying to tell you, exact. If I say it's going to be 1%, will it be 1%? No. But I cannot give a forecast like that. It will be 10%. I mean, it is out of range. And then it is actually, when we come to that day, it is actually 1%. No, that's wrong. We can't do that. That's why I said, how you calculate the forecast is your judgment. Why a particular client has come to you? Because he knows. Because the client knows that you are a chartered accountant in practice, you have such experience, knowledge and skill. So you are supposed to give us a forecast which is good, which is near accurate. It will not be off by the mark by so and so percentage. You have to be careful about the percentage by which the forecast may be off the mark. Right? You cannot say that plus minus 50%. No, then that's a rubbish forecast. All right. But we cannot vouch for the accuracy of the forecast. We can't do that. Okay. That's a gross misconduct. Okay. So keep that in mind. Permits his name or the name of his firm to be used in connection with an estimate of earnings contingent upon future transaction. No one knows. In manner which may lead to the belief that he vouches for the accuracy of the forecast. That the sale will be so much and the revenue will be so much. Can you tell anybody today? If you see, today Institute has come out with guidelines sometime in April when the pandemic, became this virus became a pandemic. They came out with circulars, notification, guidelines. That's how an auditor is going to report. How an auditor is going to report the, when we sign a statutory audit report. All right. Though, March has closed and we are now reporting in the month of April and May. It may not have actually impacted the client because the account was closed on 31st March. Right. And the pandemic in our country the lockdown actually started sometime from 24th of March. So, post-balance sheet event. You know that there is something called the post-balance sheet event. If it is really material, we need to report that in the current financial year. So, the guideline talks about what is the impact that going to be there because of the pandemic in the coming year. If it is very significant, it has to be reported too. And, all the auditors, we are all putting in a paragraph in the notes to accounts, and we are calling that notes to accounts in the audit report also as an emphasis of a matter that, because of there is a nice clause, very simple, we are agreeing with the client and we are documenting it, that whether they had done the calculation, the implication. What is going to be the implication of their asset and the liability? These two things we have to tell, isn't it? For a company to be a going concern, that what is the asset, what is the state of the liability. If the machines are, if the plant is shut down, the plant is shut down for such a long time, so there will be a wear and tear of those plants which is not running. So have they considered such such impact? What will be the impact if the plants are not running for the, say, last 5 months? There are several factories, probably mid-size. Large factories have all started. All right, but in lower scale because they don't have people to run it. All right, so there are so many ifs and buts there because of this pandemic. Even they wish to run, they cannot because people are not there. So now what happens if the machines are not running? It will have a wear and tear. So what will happen if there is a wear and tear? You need to repair it. You need to overhaul it. If not repair, it needs to be overhauled before they start again. Before they start afresh. When the pandemic goes off completely or in a staggered manner that they have started. Have they calculated that cost of the overhauling? I'm not talking of a small a small machine. And just think of large factories in our country. An overhauling will take huge cost. Have they taken into consideration that will have a pinch in there, that will have a hole in their pocket of the balance sheet? Have they considered that? So that could give effect. That could be a post balance sheet effect in case it is a material. So if we see, so we talk to the client and they tell us that we have done our impact analysis and this is what we have done. They prove you. They give it to you in figures, okay, relating to the assets and the liabilities. And then if we are satisfied, then you decide where you will comment, whether it will just be an emphasis or a qualification or just in other matters, that you have to decide. But essentially that has to be put into the audit report. Okay, I'm digressing a little. So coming back to the accuracy of the forecast. So forecast, as I said, forecast is always inaccurate. Okay, it could be near accurate. So a member in practice should never vouch for the accuracy of the forecast, that it is 100% correct. That's what is a misconduct for clause 3, part 1, second schedule. All right. Please remember that, my dear students. If you have question, post it. I will answer it. And there are standards. For these, there are standards given by as I said, there are standards given by the institute. SAE 3400, that's a standard on assurance engagements, examination of the prospective financial information. Okay. So when you learn that, you should go through that what we can say and what we cannot. Assumptions. Please remember what it is based on assumptions. And assumptions are never, doesn't have to be always correct. We are not fortune teller. Right? We are chartered accountants in practice. We are not fortune teller. So some fraud will happen. Something this will happen. That's just an assumption. Okay. And it should not be, we should not make a wild assumption. It has to be guided by, data. It has to be guided by the data of the past and future projections and keeping in consideration the actual that's happening in the world today. And of course in our country today. We have to keep that in mind. A particular industry. All right. We have to take into consideration that industry, whole lot of things one has to take into consideration. Keep that in mind. We are giving a projection for 5 years. So very difficult today. Just imagine. So very difficult today. Okay. Like I was doing, I can give you a example. A live example which I am currently doing, for a client. I have to, they're taking loan. The client is giving loan. Sorry, the client is giving loan for highway projects, and they have the interest component. Then naturally the interest component will be paid by the client to whom they are giving this loan. So they want to know the sustainability before they give out a loan. They want to know if that company to whom they are giving this loan for infrastructure, they are capable to repay the interest at least, because there will be a moratorium for 5 years. It's an infrastructure loan, so there is a moratorium for 5 years, but not for the interest. Interest they have to repay before giving out the loan. These are the due diligence and things like that. That whether they can generate enough money to pay the interest. Now, what is the interest rate? So based on that, so assumptions. So how do I make such assumptions that whether that company will generate such revenue to pay the interest? Because they are not only going to pay the interest, there are other expenditure also. So future projection is very, very difficult. It can be, and that's why I'm using the word, it cannot be accurate. So I will give an assumption. I'll make assumptions and I will write what are my assumptions, that they have to be very, very correct, that these are the assumptions. I'm not making any wild assumptions. The assumptions should be supported by facts and figures. Okay. And based on this, I take a decision that yes, there is, sustainability enough. They will generate enough money to pay your interest along with the other, expenditure that they are going to incur as part of their operations. All right. So those kind of things. But I'm just giving a projection. So it cannot be 100% accurate. I cannot vouch for it. If they say that you vouch for it, that it will be correct, no. I cannot. I give lot of, this thing subject to so and so. Okay. Come to the next. Clause 4. What is clause 4? Expresses opinion. Here the word is opinion and substantial. Okay. So please remember the word opinion and substantial. Expresses his opinion on financial statement of any business or enterprise in which he, his firm, or a partner in his firm has substantial interest. Interested. Okay. We are not supposed to give such opinion. Okay. You are the auditor's spouse is working there. It is a substantial interest. Relative is working there other than the spouse. Somebody is working there within the meaning of the relative. Alright. So he cannot give an opinion. He cannot, ideally, as we discussed previously also, ideally he should not be a part of that audit team. Okay. Opinion he cannot give, ideally he should not be part of that audit team also. Firm can take up that job, of course, but he should not be, the partner concerned should not be anyway connected to that engagement, right? So keep that in mind, that if he has substantial interest in a particular company where the firm is having some engagement, the person concerned having such interest, a partner having such interest, should not be giving any opinion. Okay. And it includes all type of audit, not necessarily statutory audit. Please ensure that to keep in mind, because a case study may come like that it is an internal audit. Can he do that? No, he cannot do that also. That is also important to remember. It includes professional work like tax audit, concurrent audit, everything. Okay. So those cannot be. So if he is interested and any of such audits are concerned, he should not be giving his opinion. Okay. So independence. Here the important factor is we are talking about the independence. Okay. Independence of mind. So I am not influenced. I am not biased. I am not getting biased. If some close relative is there, it is expected that we will start discussing, and you get influenced. You get biased. So auditor's responsibility is to an unbiased opinion. That's independence, right? We are not under any question. We are under not any, influence of anybody's who's having a, who's working there. So we take an unbiased opinion based on our skill, experience, and of course the work that we have carried out in the course of that engagement. Okay. A director, like some examples, like director, he is also a, non-whole time, and he's not a managing director, he is a part-time director there. And he's also having a certificate of practice, and he's practicing chartered accountant. He should not be giving opinion. I'm sorry. He should not be giving any opinion on the financial statements that the firm is working on. Okay. And Companies Act is also applicable there. Companies Act also talks about such thing. It prohibits Section 141, Section 141 talks about whole lot of, appointments. What are the disqualifications of an auditor? So one of the disqualification is that if you're a employee there, part-time employee there, and you're also, you cannot take up the work of an auditor in that particular company. Okay. If he's an officer or an employee of that company. So we have to be when we are talking of this, the opinion and substantial interest, we must read it with the qualification and disqualification mentioned, given out in the section 141 of Companies Act 2. Keep that in mind. Like some more examples, some more case studies probably. The institute has permitted, the council has permitted a member in practice to take up part-time job as a lecturer in a college. Can he be appointed as a auditor there? No. The firm can be appointed, but he cannot do the audit there. He cannot take up the audit job in that particular college where he is also working as a part-time lecturer. Okay? So these kind of things one has to keep in mind. A member in practice is also liquidator of a company. He has been appointed as a liquidator of company. He cannot do the audit of that company. Okay, so both the things he cannot do, either of the two. Okay, just keep this in mind as in terms of case study and examples, other than the examples that I gave from my personal experience. Okay. Now 5.6, coming to clause 5.6. To remember, some tips to remember. 5, 6 and 9. 5, 6 and 9 talks of material. Keep this in mind, materiality. Clause 5, clause 6 and clause 9 talks about materiality. Okay? What is material? So clause 5 talks about that a member in practice fails to disclose a material fact which is known to him and is not disclosed in the financial statement, but disclosure were necessary in making such financial statement not misleading, where he is concerned that the financial statement in a professional capacity. Confusing? I am making it simple by just dissect it. So first is that a member in practice and he didn't disclose certain information which are of material nature or value or can have a material impact, which is known to him during the course of his audit. He didn't disclose it. So what's wrong? What could go wrong if he didn't disclose it? The financial statement is misleading because he didn't disclose it. It would have been better. It would have, if he had disclosed it, it would not be misleading the reader of the financial statement, stakeholders who would be reading the financial statements. To them, it would not have been misleading if he had disclosed. That's what we are talking in the second line. But disclosure of which is necessary in making such financial statement not misleading. So simple English, that because you didn't disclose, because the member in practice, the auditor didn't disclose, the financial statement became misleading. Is it making sense? Because the second line, please, you have to be very, very careful about, the understanding the language. So what is taking in simple terms, it says, the second line, it means that if the auditor has disclosed, the financial statement would not be misleading. That means because he didn't disclose, the material statement is misleading. Are you getting it? I need an answer. Yes or no at least. Yes. Sai Prasad said, yes, we sign projections. Don't get confused that we cannot sign projections. We all do. Every CA in practice we do that. But what I am trying to say, it is just a projection. We are never telling in writing, neither giving in writing, not telling them verbally that it is an actual 100% correct projection. The very word of projection means it may not be actual. Why then we are calling it is projection? That it can happen. subject to the fact, whatever our assumptions are, they also materialize. Please understand, my dear students, that projections means that we are forecasting something, provided 1, 2, 3 things, they happen. Now suppose those 1, 2, 3 things do not happen, the projections will go wrong. We had so many projections for 2021. Nothing is materializing. Nothing is materializing because of the pandemic. Do you mean to say for 2021, the chartered accountants who, in practice, including myself, who made so many projections, will be falling under the misconduct? No, we will not be falling under misconduct because the projections are way, they are way off from the mark because of the pandemic. So that's one. Second is, and never anywhere while signing that projection we mentioned that we are vouching that projection is going to materialize. No, we never said that. We said it is a projection. That you are going to have so much of revenue. Just see the state of the GST today. Why they cannot give? Why center today, they have just, raised their hands that we cannot do anything. State, you do this. You take loan. Was it in the projection before? Now there are so much of, hue and cry that this is against constitution. You can't do anything about it. Was the projection was like that? And in that projection, there are so many chartered accountants involved, including the ministers and the MPs. Were they wrong? They were not wrong. It was made during the time when certain things were in place. Because those certain things are no more in place, the projections are off. This doesn't happen every day. Pandemic doesn't happen every day. It happened probably once in 100 years. So what I'm trying to say is that please keep in mind not to get confused. We are not giving any written, any written statement that my projection is going to materialize 100%. 100%. No, it may not materialize 100%, but it will not be off by a percentage which is not acceptable. Okay, that's what we all sign. But the clause says, I'm going back to the clause once more. The clause says that accuracy of the forecast, that we vouch for the accuracy of the forecast. We do not vouch for the accuracy of the forecast. We always say that provided the prevailing situation prevails at that point of time in a year to come, whatever the projection period, 3 years projection period. So 20, 21, 22, if the prevailing period as it stands today, okay, I'm talking of say 2019, that if it prevails also in 20, 21 and 22, the projection that I am going to give should materialize. I have already given that this, I have taken that subject to that clauses that provided that these situations prevail. So we are not vouching for the accuracy. Please keep that in mind. Keep that in mind. Yes, Krunal, example of clause 5 is, yes, non-creation of sinking fund. I'm not taking that example because that is already there in the book. Absolutely correct. That non-creation, I am coming to that, some examples of material fact which is known to me. Had it been disclosed, it would have been less misleading or not misleading. Yes, that fund has been not created, or loan has been given from the, a loan has been taken by a company from its PF fund. Those things has not been disclosed. So there is some, gap in reading the material state, the financial statement. Okay. You are saying means auditor is aware of the fact and is not disclosed, but required to disclose that fact that FS. Yes, that's what. Ranjit, you are right. That's what. Exactly. That's what we are meaning. That we are aware of a fact and we didn't disclose it. If you had disclosed it, the financial statement would not be misleading. Okay. An example, if I can give you another example, debtors are many a times written off. the client now, without making a provision, straight away write off the debtors. Okay, and we didn't mention the situation under which the debtors were written off. Isn't it an important fact for the stakeholders to know that the debtors had been written off just like that? There could be so many reasons. You just try to analyze how a debtor can be, why a debtor, debtor balance can be just like that written off. That the reason could be failure on the part of the company to not recover it, or they didn't, their marketing department is not good enough, their internal controls are not good enough, or the client has, from whom the money is due, they have gone broke, they are negative. Okay, so there could be so many reasons, and it gives rise to so many things. That why the lack of internal control. When you sail, when you are sailing, don't you see whether why did we sail on credit? Most of the organizations, large, I'm talking of medium to large scale, size organizations, they have so much of credit policy. That whom do you give the credit? Why should? So unless and until a person is credit worthy, credit should not be given, right? Like simple example, when you take a credit card, credit worthiness is not checked. So similarly, in case of large corporates, when they are selling, when they're having new customers, are most welcome, because revenue is the one of the major things. Otherwise, they will not have profit. They cannot sustain. So, but they cannot give credit. They have to decide. They will take, deposits and things like that. And these are all audited. These are all audited by the auditors these days. We have to see the internal controls, whether it is by internal auditor or by statutory auditor. You remember clause 5 is applicable for any type of audit. Alright. So, if an auditor fails to do so, one is that he has failed to do so, and or it has come to his notice, and then he probes. That why this is written off, and it is very material. When we are talking of such write-off, it is of material amount. Okay, materiality is driven by so many things. You will come to know later during the other classes also. So it is a material amount, and it has been quietly been written off in the book, and it is appearing in the books of accounts. But and you, as an auditor, you came to know the circumstances under which it has been written off. It will be good to report it. Okay, otherwise it is misleading. It is not incorrect. The financial statement is correct. They have written it off because it is no more recoverable. Okay, so their financial statement is correct. But the situation which give rise to such kind of a write-off, or not making a creation of a fund and things like that, that background needs to be given if it is of material, if it is of a material nature. Okay, that needs to be given by the auditor. Loan taken from the PF fund. Can the loan can it be taken from the PF fund, employees PF fund? No, it cannot be. Okay, it is meant for the employees. So that, where the fund is utilized? Fund is utilized in investment. Right? How can you give loan to, it is your own in your own company also, how can you give such loan? And what happens when the loan is refunded? If you see the example that is given in the book, that when the loan is refunded through the check bounced. Okay? That check didn't get cleared. So these kind of things one has to, report. Ideally should be reported. So if an auditor is failing to report such material fact, then actually he will be guilty of a misconduct under clause 5, part 1, second schedule. Okay. Sai Prasad, thank you. Okay. So that's clause 5. Why I'm going very slowly here is the reason that these are all practical. The second schedule is very, very practical. This is our bread and butter. This we do. Every day we are doing this. Like as I said that, we are chartered accountants are signing projections. Yes, we do. That is one of our service area, line of service. We will do. But we have to be, as a practicing chartered accountant, we should be very, very careful All right, and that's why I'm taking so much time in explaining for your exam purpose. Naturally, this will carry more weightage in your exam. They will try to understand how much you have understood it practically. Okay? So, 5 talks about such material fact that has happened and come to your notice during the audit, but you chose not to disclose it. In such a case, a member in practice will be guilty of a misconduct under clause 5, part 1, second schedule. Okay? Okay. Then, let's come to clause 6. It talks about material misstatement. Easy to remember. Easy to remember? You must remember. So I said 5, 6 and 9 talks about materiality. Okay. Now the difference between 5 and 6 for your how will you remember it easily? That 5 talks about material fact. Okay. And 6 talks about material misstatement. I'm sure you understand the difference between the two. Material fact is not a misstatement. All right. It is a fact because if I do not disclose, the financial statement would be misleading. That much. All right. That much. Giving example that somebody has written off a date. Bad asset has been written off. Okay. Is it a material misstatement? It is not a misstatement. They're supposed to do so. If it is not recoverable, you have to write off. There is no misstatement. But there is a fact underlying that write-off. Why did you write off? So, that fact is quite serious in nature because it can give rise to cases where internal control may be missing, situations where internal control may be missing, and as an auditor, we need to report any such, such thing where internal control may be weak or things like that. And it is not, if we say that internal control is good, in the reporting there is a separate reporting structure today. Right? By the Companies Act requirement that there are separate chapters where we have to mention about the internal controls. I am not talking of only CARO. All right, other things that in detail, the internal financial controls over financial reporting, IFC. Okay, so there we have to mention whole lot of things. Now, as an auditor, you give a clean sheet there. No, you should not. So if somebody's stakeholder is reading the financial statement where he sees that it has been written off, but he also sees that report where nothing has been reported that internal control is less, the fact that marketing could not recover the money and hence it is written off. If such statement is not giving, the stakeholder even wouldn't notice, wouldn't be misleading. It is misleading. All right. But had it been so that the auditor has also reported there, it would be just. It would be good to understand under what circumstances it has been written off. Okay, so that's 5. Now 6 talks about that it has been misstated and materially. The financial statement is misstated, which he comes to know during the audit. Okay, fails to report, and it is a gross violation on part of a member in practice, that we fail to report a material misstatement known to him, okay, to appear in a financial statement with which he is concerned in a professional capacity. Means you are auditing and you do in whatever capacity. Please remember, not necessarily statutory audit, all kinds of audit. In these, all kind of audits are covered. That's why somebody asked, in the previous class, what is the difference between the two schedule? This schedule is much more rigorous. I said that day that it is much more rigorous. Do you understand today why it is so much rigorous? And I will in the last I will take you the discipline, the flow chart for the how in case of a misconduct, how it is taken into consideration in the institute. You will see it straight away goes to the disciplinary committee. Okay, it doesn't go anywhere. If any member is guilty of a misconduct in second schedule state, goes to the disciplinary committee. Okay, so one has to be very careful about these things. So this is very rigorous and of serious nature, very serious nature. So fails to report a material misstatement. known to him, and it is known to him, and we fail to do so, we are guilty of misconduct under clause 6, schedule part 1, second schedule. Some example, depreciation. I have seen in my personal, in my career, in my personal experience, depreciation has not been charged. And believe me, they were giving that, they were under, what do you call that? They were under, not lockdown, lockout. Lockdown is a new term we learned. Okay, lockout. The factory was on lockout. There was a strike, these workers were on strike. So there was a lockout declared in the factory, and the factory didn't run for substantial period, say 6 months or 8 months, I don't remember exactly. What I remember, that they didn't provide for depreciation. When we asked, they said, why should I? Because there is, the machine didn't run. Machine didn't run. Is it correct? Is it correct to do so? Okay. So depreciation under provision of depreciation. Is it so where will it come? Material misstatement or a fact which could be material? If not disclosed, it is a misleading. It is a material misstatement, because here the accounting is happening. The balance sheet is, profit and loss account is wrong. Why it is materially misstated? Because the balance sheet and the profit and loss account is wrong. In the first one, the balance sheet, profit and loss account is correct. But what gives rise, the various conditions, the facts and figures, which produces that balance sheet and profit and loss account needed more clarity. That is what we are talking in clause 5. In clause 6, we are saying the balance sheet and profit and loss account is misstated because there is an under provision of debtors, or under provision of depreciation and things like that. In bank, it's a favorite thing for an auditor to, an example I can give, that an asset which has become an NPA is not disclosed an NPA, and naturally the provision is not made. Will it come under 5 and 6? Clearly come under 6, because it is misstated. Because they're showing it is as a good asset, my asset is inflated, and not only that, my the profit and loss of that the profit of that bank is also inflated, because they didn't make enough provision, isn't it? Which should have gone into the debit side of the profit and loss account. So the profit is inflated. On the other side, the asset is also inflated. There is no provision against that particular asset. Okay. So hence, it is a material misstatement. Okay. Many a times they make it. There are so many examples. Valuation is done. Valuation is done in such a way that the asset looks good. These are used for getting better loan. Okay, CCOD loan. So we are having a list of assets, current assets, including the inventory, where the inventory value differs from that in the balance sheet. Those who have the experience of doing bank audit, this is a rampant case example that we get to see as a member in practice. When you do a bank audit, all right, a branch or any branch you go, even as a central statutory auditor, you have to do a branch audit, large branch audit. What you do, if you are checking the current, not the term deposits, the overdrafts, CCOD, cash credit. So it is based on current assets, right? The limit is given based on the current assets. So you have the monthly, they are supposed to monthly or quarterly based on the agreement. You are supposed to get a certificate from the client who has taken the loan. Okay, that what is the state of their current asset, which includes the inventory, and then you try to match. If you're doing the job, if a member in practice doing the job diligently, what we generally try to do, for 1 month at least we can get to match the inventory balance with that in the balance sheet. Month of March, they have given our balance sheet also, dated month of 31st March, and they have a separate statement of inventory which they submitted in the April. and the balance sheet they might have given in June, July or later. In 90% cases, in my personal experience, in 90% cases, there is a gap between these two statements. And just imagine both the statements have been signed by members in practice. And if it is signed by the same member, then we are in trouble. Then we are in trouble. That if it is signed by the same auditor, the auditor is in trouble. Okay, we will be guilty of the misconduct. Okay, because we didn't see what we are certifying. In the month of April, we certified rupees X, and when we are doing the audit, we see that the value is much less than that rupees X. Maybe it is 50% of that rupees X. Okay, so we have to report it. That we have to take clarification from the management, but why did you do it? And we have to send a separate, disclose this separately. We do not have to report it to the bank, but in our audit report we have to disclose it, because this audit report also goes to the bank. Mandatorily it has to go to the bank. Okay, so there are various means and ways of reporting, but the thing is that we must report. So material misstatement is that we knowingly that the accounts is not done up correctly. There are misstatements there. Some of the such examples. We are guilty of misconduct. Some more example: capitalized, revenue expenditure. Because why? We do not want to. Our profit is falling, so capitalize it. We don't show it in the profit and loss account. You just show it in the, balance sheet. It become a both side balance sheet, bank and the outflow and the asset also. Asset becomes big, and it is not routed through the profit and loss account. So that's also wrong. So these are the things an auditor definitely, as part of our audit, we check this. Don't we check this? That what asset has been purchased during the year, and we review through, looking into the documents, and then we see if some expenditure which they are actually capitalizing, they are not in capital nature, we do report it. We do report it. Another case, this happens. This is again from my practical experience. I'm telling you, they do not capitalize. They keep it in capital work in progress. They continue to keep it in capital work in progress. They are not capitalizing when actually everything is done, and actually they have put it to use. They do not want to depreciate. They do not want to depreciate. And many times what happens, this happens in bank also. It is not always machinery. It could be furniture, it could be fixtures, it could be, computers, whole lot of things. It doesn't have to be necessarily machinery, but the amount is substantial, material. All right, they're putting it in and they do not come to know of it. They have got the expenditure, but they do not have the asset details, so they keep it in capital work in progress, and they are not getting it. They are not either knowingly they are not doing it, or by mistake they are not doing it. But as an auditor, we need to see what are the things that is lying in capital work in progress. And if you see that they are continuously using, people are sitting on the chair, they are using the laptop, and it is still lying as a capital work in progress. No, that's wrong. That means you are not depreciating. All right, that's a material misstatement. Okay. Now, whether it is a material, you have to come to that figure. That will vary from organization to organization. All right. Okay. I do not want to give you a figure. Materiality is calculated based on the auditing standard. Okay. Keep that in mind. Any questions? 6, 7? They have to give a Mukesh, they might have to they have to report it. They have to report it. Because if you see, they have to prove it, and they might have to make a provision for the fine. They do not they do not provide for depreciation because the machines were not in use. Okay, fine, agreed. They were, so this is based on the unit produced basis. Fine, agreed. For the sake of this case study, we accept it. But have they taken the provisional cost for overhauling? That they will have. Did they make such judgment that what will be the cost of such overhauling when the machinery starts? there are lots of ifs and buts, so that one need to take into consideration. Otherwise, it becomes a material misstatement, and we fail to report that. Report is there. We have many places to inform. It doesn't have to always come in a main auditor report as a qualification. We can emphasize also. The reports are today it's beautifully given that where we can give our opinion. So there are very many places. It doesn't have to be necessarily a qualified opinion. Based on whether it will be qualified or not, that depends on the materiality concept. So if you think that it is of material nature, it can either be qualified, or it can come to the emphasis, or if it is not, it can come as a note in the other wherever there is scope to give so. Okay. Now coming back to clause 7, it doesn't exercise due diligence. Negligent is the term here. Please remember negligent. I'm first giving you some terminology to remember the clause negligent. So 5 and 6, 9 we will come later. 5 and 6 talks about materiality. So to remember that, please remember whenever a materiality word is there in your case study, or you come to such conclusion that it is talking about materiality, please ensure that it must be falling somewhere in clause 5, clause 6 or clause 9. Okay. And negligence, gross negligence comes to as part of clause 7. Doesn't exercise due diligence or is grossly negligent in the conduct of his professional duties. We cannot be, we just didn't check it, we just sign it. That's a gross negligence. You didn't check the documents properly while before you sign the report or the certificate. It's a gross negligence, And you cannot give a condition for such negligence. We cannot say that we could not review because we could not check because of the pandemic. No, you can't say that. You have to have ways of checking it. All right? You have to have ways of checking it. You cannot say you didn't get the physical verification done. Again, I'm giving some practical experience during the last couple of months, and related to March balance sheet. We do some physical verification of large electricity distribution company, and for that matter, we have to go to several small locations. Because of the pandemic, we could not go. We said, no, we will not do it. We will not do it because we cannot get the report from the system and sign it. We can't do that, can we? Now, how that has been reported by the main auditor, who is actually doing the audit of that particular electricity distribution company, I haven't seen that. The report is not yet out. It is a government one, so the report is not yet out. But I'm sure they cannot write that we could not verify the inventory. They can say maximum that they can say that the valuation could not be. We cannot give our opinion about the valuation or the value of the stock or the quantity of the stock because it was not physically verified. But that I couldn't verify because of this, we could not. But we have to mention it that the quantity we cannot give our opinion on the quantity. That opinion, because when we are doing a statutory audit, it is asking for our opinion. So the opinion is that we cannot give an opinion on the quantity of the stock because it was not physically verified. But we cannot write that we give, all the financial statement is true and fair, but we could not verify the inventory. Those kind of things cannot be written. Okay? Doesn't exist. So we have to use our knowledge, and again we have to do the work diligently, and which should not be termed as a guilty of gross negligence. Okay, that is important for us to remember. Many times client asks for turnover certificates, it is required at various places. Many times they ask for certain certificate for certain big expenditure, certain big expenditure required for a particular reason. And without looking into the data, so we are just certifying. So there are, if you remember students now, if we do not look into the information and then sign where it comes to clause 2, right, without examination, and it can also give rise to gross negligence. Please remember, before also I have told you that a case study may have more than one clause covered. You have to be careful. If you can identify more than one clause, if it is actually so, definitely you will score better than the other. But be very, very careful, okay? And that is the reason it is so very important for you to note down to remember the clauses, sequence of the clause is also very important, and the content of the clause is very are important. So you need to remember. So if you see that a person is signing without verification, so both the clauses can come, clause 2 and clause 7, depending upon the case study statement that they have given. Okay, it would be a good practice. I don't think you will get the time, but if you can go to the hall and quite quickly write down, the clauses in a separate sheet of paper when you write, probably you will not get time. So that's why it is good you have to memorize. You don't have a choice. So issue certificate, some examples, issue of certificate. Many times it happens, we issue certificate on turnover, as I said, product wise. Now, suppose some client is asking for a certificate only for the turnover. Turnover of what? Turnover of products or services. Have the certifying chartered accountant, the chartered accountant in practice who is certifying that, has he checked that what are the contents? How that figure of turnover is, computed? What are the products or the services that are being sold, or they are being written in that turnover statement, that they are being generated from that sale of those products and services? You have to see. Probably you will see, if you see in detail, some of the products and services are not there as part of their business, but they are showing a turnover. Will it not be a misconduct on part of the member? It will be. We are signing one figure, that the turnover of this company for the period from April to June is so and so. Only one figure. Okay? That may be only in crores or in dollar or whatever. Is that enough? The client will say, it is only one line. Why you want to see so many things? We need to see so many things because we do not know what is the constituents of that figure. We have to know that how is that figure calculated? What are the components of your, that revenue? So you have to tell them, give us product wise, service wise, month wise, the breakup of such turnover. We will give you the certificate the way you want. That is not a problem. And the certificate is also, the language should be as per the guidelines. Alright? So, but we need to review that. If you do not do that, we will be guilty of misconduct under clause 7 as well, that we are grossly negligent in our professional duties. Okay? Some more example, which happens, bank certificate, bank statement. It is so important, as auditing standards say, that when as an article student, you go for an audit, your principal or your partners or managers would say that you please do the bank reconciliation, okay, and confirm that the bank figures are correct as per the trial balance. What do? You straight go and do the bank reconciliation and you are happy taking the bank book. Don't you check it with the bank statement? Bank statement is not good enough. You have to take a bank certificate. You have to take a bank certificate also for the year end. They will say they don't give. Of course the bank gives. Who says bank they do not give? The client, they do not make that effort to get that bank statement. Alright, they do not make that effort to get a bank statement. The moment we force them that no, we need a bank statement. Otherwise, probably we have to, put that as a, report somewhere that the control, adequate internal control is not there. So we do not get the bank statement and all. Bank certificates are very important, at least for the year end, at least once. You do not take, and hence you cannot corroborate with the bank balance that you get to see. Because many a times it happens that you do not know, probably they are giving you the bank statement for the full year. You do not, and they are giving it in soft copy. Alright? And it is so thick. You do not know even if some pages have been taken out. One has to glance through the bank statement to see what kind of transactions are passing. It's very, very important. You know, the checking of the bank part is very, very serious. Okay? It's not simply doing the bank reconciliation. Bank reconciliation is simple. Bank reconciliation is all about coming to the bank balance or as per bank book or as per the bank statement. That's not all. You have to see what kind of transactions are going, because you remember that we can come to know of the fraud. How do you come to know of the fraud? How do you get a sense of the fraud? That fraud is happening. You get to see the money that is getting transferred. Huge money is getting transferred unless to somebody which is not of business interest, which is not for business purpose. It is getting transferred to somebody, and at the end of the day, that money is coming back. Some practical experience I'm sharing with you, and they are within the balance. The money is going at the, morning, and the same money is coming back at the end of the day. Okay? So what is happening? And you are very much within that credit limit. Okay? So what is happening? What could be the reason that such money, and you see to whom it is going? It is going to somebody, then you start, because it is regularly happening. How you can see the fraud, that, it is the pattern one need to see. Once in a while it is happening, or it is happening. Fraud will generally happen over a period of time, or it could be a one large transaction. It can happen also. A smart guy will make one single move to take away the money. Right? So, such transaction checking is important. Probably he is taken away to do business in the share market. And every day he is returning. Every day he is diligently returning. So, it will naturally give rise to something in your mind, that why such kind of money is going out every day and coming back every day. Has to be something. The moment you probe, you get your answer. This is the way the fraud. And if you miss out on this, can a chartered accountant in practice later on say, I didn't see it? No, you are grossly negligent in your duties. So how this is going to be an article student or a staff may not be that experienced as a partner. So, internal policies and procedures are important, guidelines are important, auditing standards are important, documentation are important, partner review are important, file review are important. So that's the way it is found out whether some fraud has happened, or somebody is negligent of a duty, of his or her duty. We may have to go back and check it. Many times it happens. No, I'm not happy. Client gets angry at times. They will say that your staff has come, your article student has come. Again, you want to say, yes, they have missed it. I'm sorry. I'm sorry that I'm coming back again. But we have missed it. But I have to check it. They will give you. Alright? But that's what avoids the gross negligence. We have to be very careful, and that's why the documentation, the review of the audit file are so important, so very important. Alright, and we are guided by auditing standards. And you see the safeguards are there, which are the auditing standards, and even if we don't listen to that, then follow the consequences of being guilty of the misconduct. Okay? So, gross negligence. Another example of gross negligence, we didn't complete the job in time. We didn't complete the job on time. What happens? You're doing a tax audit, you couldn't complete your job on time, and the return was not submitted on time. GST return was not submitted on time. 3AB was not submitted on time. Alright? And the client was penalized. It is a gross negligence on your part. Okay? Moving on to Clause 8. Clause 8 talks about failing to obtain sufficient information which is necessary for expression. You see, they are so interrelated. 2 is saying that we didn't check. We didn't check because we didn't take sufficient information. And that gives rise to misstatement. That gives rise to negligence. These are very interrelated and very, very complicated, these schedules, second schedule. I hope those who had this question, the difference between first schedule and second schedule, you are now appreciating the fact that second schedule is very, not only serious in nature, complicated, difficult to correlate which one falls under what, right? It will give a statement. It might seem that he's negligent. The moment you think of that, also start thinking, because you have to memorize and you have memorized, that why he was negligent. Did he not take the sufficient information? If you can get it from the case study, please also mark clause 8 in your answer. Think a little bit, think a little more. Okay? Straight away you are saying that it is a case of negligency. Alright? So you got that clause 7. Good. You got it that it is under clause 7, part 1, second schedule. Read it little more, that you see whether it is also talking of that why he is negligent. He didn't review it. He didn't examine the documents. He had got the documents, but he didn't examine. Additional clause comes into play. Clause 2. Alright? Another scenario could be that he was negligent. So clause 7 straight away. He was negligent because he didn't ask for didn't get sufficient information, didn't ask for sufficient information. Probably clause 8 also. So you see, a student who will write one clause where more than one clause is applicable, naturally the student who is writing more than all the clauses which are applicable will get more answer. So please, students, read the question more than once. Don't jump to conclusion, okay? Read it more than once. Probably, if it is related to second schedule, if it could be related to first schedule also. It could be related to, if it is a, complicated kind of a case study comes, it's a 16-mark case study. So it could be related to first schedule also. So that's the reason why you have to memorize. And you have to keep this one. You cannot have a document which you can carry, unfortunately, which you can carry in your exam hall. These you have to carry in your head. Okay? Fails to obtain sufficient information which is necessary for expression of an opinion, or its exceptions are sufficiently material to negate the expression. Okay? So whatever, you are giving an opinion, it is wrong. Because, so misstatement is coming. You see another clause come. So it could be so many things depending upon the language of the case study. So sufficient information he didn't get. If he didn't get sufficient information and he fails to obtain, he didn't ask for it. Remember, I was telling you that that's why when we do an audit, we sit down. We just don't go and start the audit. We are ready, you please come. No, we do not do the audit that way. Ideally, the auditing standard tell us this is the procedure and policies of the firm concerned who's doing the audit, that you jot down what are the requirements. You please send the requirements. Maybe we have to spend 7 days sitting at home going through our earlier files. We talk to the client, what is the new scenario that has happened, new business, if something is there in the, in the client's new cases, some court cases have come in. We need to talk to the client, and then we prepare a list of the information that we require for our audit. Because client always, in today's age, client always asks that you don't ask us, for information one by one. You please send us an information. And at the end of the mail or, the written request for information, we always write that this is not conclusive, this is not all. So this is not complete list. We will also ask for some more, but this is more or less all. Okay. So that one has to prepare. So that's what. Why he didn't get the information? Because he didn't obtain it. He didn't ask for it. You never know if the client will say you didn't ask for it. Client will never give you the information in a platter. The fundamentalist thing, if auditor, we have heard many times. One of my students came back, again a practical experience. Students came back and told me, madam, this, he's saying that unless and until they ask for it, don't give it. Don't give it. Yes, that's a principle for an auditee, that unless and until an auditor asks for information, you don't yourself give out. All right? Okay? So you need to ask for the information in one go. We have to be careful about that. Unless and until we do so, it will be guilty. We will be guilty of misconduct under Clause 8, Part 1, second schedule. Okay? Depreciation. Say, for example, the depreciation figure. It is part of the trial balance. The depreciation figure you get to see. Did you check the depreciation? Somebody will say depreciation. Why to check depreciation? It has been calculated by software. Software has calculated correctly. But did you check it? That how do you know that the software has calculated it correctly? So we have to get the information, detail the calculation. We see the calculation sheet and match it whether it is matching with the Schedule 3 of the Companies Act 2013. Many times you may see that it has not been. So, alright. So those kind of things are important for us to remember. Any question? Okay, Ambika, good. Okay, no question. Alright, we'll move forward. Please remember, as part of the Clause 6, when we are talking of material misstatement, it is not only about the financial statement, like as I said, any certificate. We are making representation on behalf of the client in the court of law or wherever. And there also we are giving information or giving, some statement or certificate which is false. If it has material impact, it will also come under Clause 6. Just keep that in mind. I thought I'll let you know. Stock valuation is important. Okay, in Clause 7 I said, fine. Just going through it quickly to see if I have covered everything. Yes. Okay. Clause 9. Fails to invite attention to any material departure from generally accepted procedure of audit. Okay? That the audit should be done. So what it implies? So here is also material. You remember? I told you where are all the material is coming? 5 and 6 and 9. 5, 6 and 9, we are talking of the materiality. So remember, this way it will be easier. Okay? And what materiality in 5, 6 and 9? 5 is material statement, not misstatement, and 6 is material misstatement. Okay? And 9 talks about material departure from the generally accepted audit procedure. Okay? Generally accepted. This is completely on the auditor. This is, remember this way. In two cases, the materiality is important in 5 and 6 about the condition in the auditee. In the condition, the auditee where you are doing an audit, that we came across certain fact which are of material nature, and because we didn't report it, the financial statement is misleading. That clause 5. Clause 6 is that we came across certain situations, certain cases in the financial statement which is a material misstatement, incorrect accounting. Okay? And we didn't report it. That is clause 6. Coming to clause 9 here is that we have certain guidelines. Institute has given us very strict guidelines to how to do an audit. Okay, how to do an audit, and which are based on whole international practices. Institute is part of international accounting bodies, and we have adopted into Indian scenario, and in some places up to the T, certain rules and procedures followed elsewhere and adopted for our audit. So, if we make a material departure from such guidelines, we will be guilty of misconduct under clause 9, which talks about that what it implies. Clause 9, what it implies? That audit should be performed in accordance with a generally accepted procedure of audit applicable to the circumstances. If you are doing a company's audit, you are guided by audit, not only auditing standards, there are whole lot of things are there, right? You will be guided by that. If you are doing an audit in government, you are doing a government audit, you are guided by certain principles, guidelines which are given by the CAG. All right? They are not company. They do not, when I am talking, please be careful. I am talking of a government, central government, which I am not talking of PSU, right? I am talking of departments where audit is also done by chartered accountants, if not by the CAG's own auditor. So we have to follow the CAG's guidelines as well, apart from our own guidelines. All right. So that's the reason why it is saying that audit, the procedure of audit applicable to the circumstances. Okay. We must follow. So what is it that we need to, as an auditor, as a chartered accountant in practice, we need to know what are the things that's applicable for us in a particular situation. Okay. And if for any reason the auditor has not been able to perform the audit in accordance with such procedure, his report should draw attention to the material departure from such procedure. It is probably we could not do it for some reason or other. We must mention that. Okay. Generally accepted procedure would depend upon the facts and circumstances of each case, but guidance is available in general terms from the various pronouncements of the institute issued by the way of statement of guidance note and the SS. All right. Guidance notes are there. Like auditing standards are the guiding principles, but institute comes out from guidance notes from time to time. Say, for example, guidance notes on COVID pandemic now. An additional comment we have to make because of this pandemic that's going on in our audit report. That's in the form of a guidance. So you have to be very, that's simple things I'm explaining you for your benefit in the exam. So not only the auditing standards, but also the guidelines that comes out from time to time by the institute and other, other professional bodies like, CAG and things like that. Members are advised to refer to exactly that's what I said, that we are part of the, International Auditing Practices Committee of the IFAC. Institute is part of that, and so it is guided by those pronouncements. Keep that in mind. Okay. So whatever is the accepted audit procedure, we should stick to that. We should not make a departure from that unnecessarily. And if we make any departure, we need to, for some reason or other, we need to make a note of that in our report. Okay. Sample checking. Sampling. It's an important factor in audit. How do you select your sample? In certain cases, you cannot have a sample. You need to see. Say for the banks. Won't you check the bank balances with the bank statement or the bank certificate? Or will you do a test check or a sampling there also? No. So those are a material departure. It doesn't take much time. I mean, one cannot later on say or write in the report that I did a sample check. No. You will be falling under the, misconduct. So please remember that these are some examples of material departure. when we do a sampling, how you ensure that there is no material departure. Okay, this is very much related also. If this clause is very much related with the auditing standards also. You see how we decide on the sample. So we take, when you take a dump of a particular balance, say purchases, you want to check what we will check the sundry creditors balance, okay, for material and services. So you take a dump of that, by product wise, service wise, you take a dump of that, and then you decide. A member would decide, a practicing CA would decide based on the materiality by quantity and value. Materiality is guided by the SA auditing standards. Now, based on that materiality, the materiality is decided at the beginning of the audit. Based on that, then, we download it from the dump that this is the sample. This is the sample which we are going to do the audit on. So our audit will be based on this sample, for which we have taken into consideration the samples guided by the auditing standards. Okay. And if we do it this way, there is a less risk of material departure. There is a less risk of material departure from the accepted procedure of audit. This is the accepted procedure of an audit. That you are guided by auditing standard or other guidelines. The auditing standards say that, okay, you can do a sampling. How do you do a sampling? This is the way you do a sampling. Okay. It cannot be a judgmental sampling. It has to be based on quantity, value, which you have decided at the beginning of your audit as material. You don't have to check everything because it's a huge list. Unlike in case of a bank, even if it's a huge list, you have to see each and every bank statement. At least the balance should be matched. At least the balance should be matched. If you read the annual reports of large organizations, it could be, hundreds of banks may be there, consolidated annual returns, but one has to see. There may be joint auditor, and they have seen, they have done their part, and overall everything has been checked. In certain cases, no sampling. Okay, so that also is not so if you are not doing sample in such examples I gave, like bank, cash, cash checking and all, cash verification, not checking, cash verification. So that's also not a material departure. Now, where the sampling has to be done in other cases. We cannot check 100% all the transactions, right? How do you do a sampling? That's guided by auditing standards. That guided by where it is talking of materiality. And materiality has to be calculated. You cannot, auditor cannot calculate 1 lakh is the materiality, 1 crore is the materiality. Or you ask the client, you tell me what is the, what value you want as a material, as materiality. No, it cannot be like that. We have to have a calculated, judgment based on which a materiality figure is arrived at, and we need to document it. So that we can later on produce as a proof that this is the basis of judgment. On the basis this we have taken the judgment basis of this. All right. So we are guided by the procedure auditing standard, and this is the generally accepted audit procedure. Then we are not falling. It will not be construed as a misconduct under clause 9, part 1, schedule, second schedule. Okay. You may give me a question. You may ask me question. These are small, things which are complicated in nature. It's a one-liner. It's 1.5 lines, but it is quite complicated. So if you have any question, you can always ask. Please feel free to ask. Okay. I'll continue. You may ask questions later on also. The last one, simple thing. This is very easy, straightforward, no complication. That fails to keep money of his client other than fee or remuneration or money meant to be expended in a separate banking account, or to use such money for purpose for which they are intended within a reasonable time. And why money is given? Other than the fee. Please remember, other than the fee. Okay? Maybe we have got there are some departure, we can have allowable departure from this clause. We have been given advance. Generally, we don't take advance as fee, but it is okay. Now we can take advance for expenses. We will be going out of station. So client has said, okay, we will give you some advance. That money you don't have to keep in a separate bank account. then can be kept with your in your own bank account, not personal, the firm's bank account. If it is not a proprietorship firm, it has to be kept in the firm's bank account and should be expended within the time frame given, okay, during the audit time, and it has to be naturally reported in the way it is required, so that it has to be accounted for it. And then what are the cases where money can be given to you and where it has to be kept in a separate bank account? You have been appointed as an official liquidator, okay, of some assets and things like that. So when it is liquidated, the money will not go to the client's bank account because of various reasons that he will utilize for some other purpose. He will utilize it for his own benefit. Okay. So they appoint a liquidator, and they also say that the money will come to that liquidator's bank account. In such cases, a separate bank account has to be maintained. It cannot be combined and mingled with the firm's bank account. It has to be a separate bank account. Okay. Trustee. Some money is kept in trust with you with the audit firm. It has to be a separate bank account and cannot be mingled with the firm's bank account. These are some of the cases. Okay. Any question? That's no question, not yet. Okay. Download all the questions. Is the video on? I didn't see these questions. There were some videos issues. I hope it's not there anymore. Okay, I think I have answered. Only one can auditor disclose the name of the prospective client on website. No, you can't disclose prospective client's name. Regulatory requirement is there? Yes. Regulatory requirement is there? Yes, you can. If there is a regulatory requirement, is there. But I don't know which regulation you are talking about. But if there is a regulatory requirement that you have to disclose the name, yes, you can. Okay, let me complete this thing, and then there are some questions relating to differences between various clauses of schedule, some of the clauses of first schedule and second schedule. I'll come to that. Okay. Okay. So, coming to the part 2 of second schedule. I have made some highlights here. Please note this. Okay, we will be discussing shortly. Contravenes any of the provisions of this Act, Chartered Accountant Act, regulations and guidelines, Chartered Accountant regulations and Chartered Accountant guidelines given by the councils and regulations of the various regulations of the institute and council's guidelines. So when we will be when you get questions, any questions, case studies which are related to guidelines also, that this is as per the guideline and now you know, so you have to decide. First is you have to decide, as I said, that it is related to whether you have to first decide whether it is misconduct or not. If you decide so that it is yes, it is a misconduct, and from the guidelines it will always come to a clause 1 of part 2 of second schedule. Okay, please remember that you have to identify at the end of the day for writing the exam, writing the answer, you have to identify the clause in the schedule, right? So if it is coming from the guideline, I have some case studies and questions for that. So you will identify it to the clause 1 of part 2 and second schedule. Okay. So anything that contravenes any of the provisions of this act, the regulations and the council guidelines issued by the council will be, member will be guilty of misconduct under this clause. So what are the regulations? We will not go into the detail of the regulations. Okay. These are but just remember these regulations: engagement, how we can engage an audit, article assistant, premium, termination, complaint against an employer, what happens then, register of officers and firms, a part-time employment of chartered accountant, that can be that one can accept, a registration of article assistant, stipend, and premium from, sorry, that was not premium to, premium from. I mean, we can't, it is absolutely a misconduct on chartered accountant in practice to take money. And it is absolutely important for chartered accountant in practice to pay money to article students as per the guidelines and the regulations. Articles assistant not to engage in any other occupation. Somebody is working, somebody is into service. Many a times happens that, somebody is in a service and wants to do CA also. That is not allowed. And Regulation 68 to 80 talks about the audit assistant. 198 talks about chartered accountants not to engage in any other business or occupation. And 192 talks about the restriction on fees. If time permits, we will discuss this, or it is not required actually to go through in detail, but if time permits, we will go through this in somewhat little detail. The other schedule, let's come to the most other important schedule of part 2. What are they? They are being an employee. You remember part 2, second schedule talks about misconduct for all chartered accountants, be it in practice or in service. Remember that. Part 1 talks about only misconduct on part of members in practice. Now we are into members generally. Okay, that means either in practice or in service. Okay. So being an employee of any company, firm or person discloses confidential information acquired in the course of his employment except as and when required by law for the time being in force or except as permitted by the employer. So this is equally applicable to the employed or members in service also. That the non-disclosure agreement or confidentiality agreement, that it cannot be disclosed only for specifically for members in practice. What is the clause? Clause 1, part 1, second schedule. And also for the members in service, it is clause 2, part 2, second schedule. Okay, that a member in service cannot disclose information to everybody in the public domain until and unless it is required specifically by law, in force, at that point of time, or it is permitted by the employer. He should not be disclosing it. Actually, when an employment gets into when a member gets into an employment, he also has to sign a non-disclosure agreement, whereby he says that we will not disclose to so and so, except if it is required by the court of law or you permit. Okay. Clause 3, part 2, second schedule talks of includes in any information, statement, written or form to be submitted to the institute, council, or any committee. Any committees that we have, so many committees like directorate, disciplinary directorate, board of discipline, disciplinary committee, quality review board, appellate authority, knowingly that it is a false statement. Okay, that's a misconduct for any member, be in practice or in service, of any member under clause 2, part 2, second schedule, that knowingly we are giving false information to our institute. Alright, so it is applicable to all the chartered accountants. It is as simple as that. These two are very simple. These two are very simple. Part 2 is very simple, you see. So either the employee is into non-disclosure agreement, should not be disclosing. If he is disclosing, knowingly, unknowingly, he is falling under the misconduct, guilty of being misconduct under clause 2, part 2, schedule, second schedule. And if a member, be in practice or in service, if some information is required to be provided to the institute and we knowingly we are giving false information, we are guilty of misconduct. Last is straightforward. Defalcates, embezzles money received from him in his professional capacity. Okay? Doesn't need any explanation, I guess. Third, the part 3, second schedule, talks about the other misconduct. You remember, I will take you through the summary. At the end of the day, I'll take you through the summary again to summarize, because we have been talking so much. So many clauses, so many parts, so many, and 2 schedules. Misconduct is there in which of the schedule? In both the schedule. Right? Both in first schedule and second schedule. In first schedule, it was in part 1. In first schedule, it was in part 4. In first schedule, it was in part 4, and there were 2 clauses. Imprisonment for less than 6 months, and it brings disrepute to the institute, right? Part 4 of the first schedule, other misconduct. And in case of the second schedule, other misconduct is in part 3, and it is only talking of, there is only one clause, which is that the imprisonment is for more than 6 months. Okay, the imprisonment is for more than 6 months. Keep that in mind, please. Okay, any question? Is there any question? No question? Okay. Okay. So if that is not there, before I move to the important council guidelines and other things, I just want to summarize a little bit from the point of view of the misconduct a little. Then I'll go to the some important council guidelines. So what is a misconduct? What is a misconduct? So misconduct is basically, this is just to summarize, you have got everything now. So when a member doesn't comply with the requirements as applicable under the Chartered Accountants Act, it amounts to misconduct. It gives rise to a misconduct. It simply doesn't, simply means not following the code of conduct. So a code of conduct is given. It is a framework. You remember, we were talking that the day one, that it is a framework within which we should do our job, whether in practice or in service. Okay, and we have separate institute. The Chartered Accountant Act has given separate schedule, first schedule and second schedule in detail, that what constitutes a misconduct. So there are guidelines given to you, code of conducts given to you, and the cases of misconduct also given to you. So there is no reason why a member of the institute cannot follow that. And from the exam point of view, this is the way you target. What is the misconduct? What is the meaning of a misconduct? What is the definition of a misconduct? There are, and the types of misconduct. Simple 2, professional misconduct and other misconduct. Professional misconduct, can we just summarize where all? A big question has come. I will see it later, huh? Big question has come. let me complete this first. We have time, we will get time. I can explain it in another class also, if required. I will continue for maybe half an hour also again. So need not worry, all questions will be answered, don't worry. So misconduct type, professional misconduct and other misconduct. Okay. So what are the misconduct? Professional misconduct given where? You remember both in the schedule, first schedule and the second schedule. Part 1, part 2, part 3 of first schedule and part 1 and part 2 of second schedule talks about the professional misconduct. Easy way, other way around. Part 4 of first schedule and part 3 of second schedule talks about the other misconduct. Easy way to remember where the professional misconducts are written. In part 1, part 2, part 3 of first schedule, part 1 and part 2 of second schedule, where the misconduct is given, what are the types of misconduct, part 4 of first schedule, part 3 of second schedule. Okay, very easy, not to get confused. So these are the macro. Now you have to go into the detail of the clauses. How many clauses are there? So what is a professional misconduct? If someone get confused based on the case study, you cannot make out whether it is a professional misconduct or other misconduct. Let's have a definition of that. Professional misconduct is unprofessional behavior. Unprofessional. This is a dictionary word. This is a dictionary meaning of professional misconduct. That you unprofessionally behaved with the client. That falls short of ethical or professional standards. Alright? That you are not taken to the court of law because you hit somebody. That's other misconduct. That's not professional misconduct. But that you have done that, but that you have not checked the documents, that you have disclosed certain confidential information, they are professional misconduct. Okay? That you have hit somebody and that is not a professional misconduct. That is a unethical behavior which will come as a other misconduct. Other misconduct means unethical conduct by a member, by a human being who happens to be a member of the institute. Institute says that we are a institute which is of lot of reputation. We carry a lot of reputation and we expect that all the members should be following they will be conducting ethically in their personal life also. Otherwise, you will be falling under the misconduct of other misconduct. So please keep in mind the difference between the professional and other misconduct. Both type of misconducts are covered by the CA Act 1949, first schedule and second schedule of the Act. Okay, so keep this in mind just for your memory's sake. This is the way probably, already you have these slides. So quick reference before going to the exam. These couple of slides will help you to quickly memorize, or refresh. You have already memorized, to refresh your memory that, and then you come to these, that there are so many clauses which are applicable for members in service or members in practice, and you then apply. Okay, keep this in mind. So coming back to the some important council guidelines for exam purpose. I have not taken all the chapters. Tax audit. The number of tax audit. Chapter 6 talks about the number of tax audit that can be taken up by a chartered accountant in practice. That can be taken up by a chartered accountant in practice. How many audits we can have? Maximum number. This was not there previously. So everybody is doing as many as they want to. So that was not on. So the council said that you have to, one member in practice can do so many audits. Okay. Audit assignments under section 44AB of the Income Tax Act 1961. Now, there are certain things that need to be explained. So, one member in practice can have, say, 60 tax assignments. Okay. Now, he is in a partnership firm. And there are 10 partners. So individually each partner can have 60. So in a firm they can have 600 in all. Right? The firm can take 600 tax audit. It is not mandatory that a partner can only sign that 60 audits. One partner can sign all the 600. Okay, it's possible. Collectively, the partnership firm can have 600 audits. So the maximum limit here is 600 tax assignments. It can be distributed between the partners in any manner. Okay, in any manner whatsoever. There is no bar on that. The bar is on the number. Remember, for your exam purpose, the bar is on the number. A firm can, for this example, the firm can have a maximum number of 600. Maximum, that's a maximum permissible limit, the number of tax audit it can take. But how to distribute amongst the partner is absolutely free. So, one partner can individually sign 600 tax audit, report in case, or in such a case, other 9 partners will not sign anything at all. Okay, or you distribute it. Or this is only for the calculation. I hope it is understood. It is simple. It is very simple. It is just for calculating the permissible number of audits by firm. That's all. Now, who will sign how many, that there is no bar. It is only for the calculation purpose. Certain more, some more. You are doing branch audit and the main audit is taken as one. You cannot, that I am doing an audit of a branch and I am also doing a tax audit of this. Okay, that will be not calculated as 2. It will be calculated as 1. Okay. If a practicing chartered accountant is a part-time practicing partner of another firm, okay, so together it will be taken as that 60. That 30 he is doing here, 30 he is doing there. So 60. It's not that 60 here and 60 there, not 120. So together, combined 60. Alright? Maximum 60 for a particular member in practice, not by the firm. Please remember that. And one has to record. We have to keep the record of the number of, audit that has been taken up by the firm. Firm is made up of partners. So the calculation, permissible number is calculated by the partner. Okay. Chapter 7. Chapter 7 talks about the appointment of an auditor in case of non-payment of undisputed fee. The wording here is non-payment and undisputed fee. What is an undisputed fee? Undisputed fee is that the work is completed, report is signed. Alright? Everything, my professional work has been completed. So, it is, the fee is due to me. That's an undisputed fee. I have done my professional work completely and on time. So, there is no dispute on that. So, the fee that has supposed to be paid is undisputed. That fee is not paid. And that particular company decides to appoint another auditor. So, the new auditor, will he be guilty if he sees that the retiring auditor has not been paid the undisputed fees? Yes. He should not take up such job. Right? If it is an undisputed fee not paid to an auditor. Also, he has to see that the company is a going concern. The company is a going concern. The company is not sick. If the company is sick and that's the reason it could not pay the undisputed fee, the new auditor is, he can take up the job. It is up to him. If it is a sick unit, at the same time, the fee is not paid. In only such case, the audit can be taken up. But if he sees that the fee is not paid and at the same time, the unit is a going concern, and the auditor takes up the job in place of the retiring auditor, it is falling under a guilty, of misconduct. So he should not be taken up. What do you mean by the SIC? SIC is where the net worth is negative. Alright? So these are simple, small things you keep in mind. And it will fall under which guilty of misconduct in which clause? Clause 2, part 2, second schedule. Okay? Specified number of audit assignments. As we discussed in chapter 6, tax audit assignments. And it is, please remember, mentioned to forgot, section 44AB. No other section. Okay? No other section like 44AD, AE. They should not be considered. Only 44AB. Specified number of audit assignments. So, how many one partner can take? That is given. And this is guided by the Companies Act, section 141 of the Companies Act. Okay? Companies Act 2013. So a partner can have not more than 20 audit per year. And these are all per year, remember. In case of tax audit also, it is per year, per financial year. It is not carry forward. So it's per year. Every year you can have that. So similarly for the audit also, audit assignments also, it is not more than 20 per partner per year. Okay? So, and there are certain specific guidelines given by section 141, subsection 3, subsection F, G and H should be read. Not to go into the detail, just to mention you, just to inform you, these should be read while you are reading this council guidelines, where they are talking about, Companies Act 2013, this particular section talking about who's the relative, and that not more than 20 audit can be taken up by a auditor, and certain offences he has committed. 141 talks about the various other clauses also, like prohibitions, like, if a member is convicted of an offence and 10 years have not passed, he cannot take up a job, take up an audit. Those kind of things should be kept in mind. Interested, we have mentioned relative as per the guidelines. Again, as per the Companies Act, he should not be appointment as an auditor will be falling under the guilty of misconduct. Okay, not only so appointment of the statutory auditor will be basically following these particular section. Appointment as the statutory auditor also will follow these sections, as chapter 8 also, where the specified number of audit assignments that can be taken up by the member in practice is also guided by Companies Act 2013, section 141. Okay? Specifically 141 section subsection 3, subsection G. Appointment of an auditor. What it does, talks about, I have mentioned it. A member of the institute in practice shall not accept appointment. I'll explain this. Appointment as auditor of a PSU, government companies, listed companies or other public companies having turnover of 50 crores or more in a year, where he accepts any other work or assignment or services in regard to the same undertaking companies on a remuneration which in total exceeds the statutory fee. Very simple. That you cannot take up a job in the capacity other than statutory auditor in the company where you are a statutory auditor, where the fee exceeds the statutory audit fee. You are having a 1 lakh statutory audit fee, and you are also getting some other assignment in that particular company where the audit fee is more than that, there is the bar by Chapter 9 of the Council Guidelines. Okay, you cannot do that. And in this case, associates and all are also included. So basically, an auditor cannot, a particular chartered accountant in practice, he cannot sign. Okay, so one has to be very careful about these things, that it not only takes into consideration the own firm, but any associates related with it, associated firm related with the main firm also has to be included, has to be considered. Okay. It may so happen that there is a separate, there is a separate audit firm and a separate other consulting firm who does only consulting business. So that's what I'm saying, that they are connected with this. The ownership is there. The firm members, the firm partners, the firm partners are also partner in that consulting firm. In such cases, these two firms, doing the statutory audit jobs and the other doing the consulting job, in such cases they will be combined. So if we do not have common partners, then there is no problem. But if you have common partners, then there is a problem. The fee will be taken into consideration there. That if the management consultancy fee is more than the statutory audit fee, you cannot take up such job. Okay. Appointment of an auditor when he is indebted to a concern. So has taken a loan. I'll correct myself here, which as I was, speaking with the flow, made a mistake that I said on day one, if you remember, that if you are taking a loan, even based on fixed deposit, overdrawings, you have taken some overdrawn credit limit based on your fixed deposit, that is also not permitted. That is also not actually permitted by the guidelines. So any kind of indebtedness, if you're taken a loan, we can't do and take up an audit there, any type of audit. And again, it is not only the statutory audit, but other audit also, internal, stock audit, whatever. We cannot concurrent audit in a bank. If it is a bank, we cannot do that. And the quantum is in this case exceeding more than 10,000 for your exam purpose. Keep that in mind. This doesn't include, a point to note here, this doesn't include the advance that you have received from the client. That doesn't mean indebtedness to the company. Okay, you might receive advance for the for many work, many job, we get advance, as I told you before. Also, it could be for expenses, it could be part of the fee also. We are doing some other type of work other than statutory work, where we can take some advance because the work will continue for say 6 months or so. So we take it in advance. That doesn't give rise to indebtedness to the company. Okay. But basically here we are talking about loan. Or it is that we have not taken loan. There is another side of it. We have not given any guarantee. We have not given any guarantee or security to the company. This doesn't include the EMD, earnest money deposit. That is not indebtedness. Keep this in mind for your exam purpose, my dear students. I cannot give any guarantee. The firm cannot give any guarantee. Firm cannot give any money. Okay? Security deposit, but which doesn't include the security deposit for the purpose of the job. That is not an indebtedness. That doesn't mean indebtedness. We can give some, it is required. Many audits today require earnest money deposit and some, bank guarantee, 5% of the or 1% of the fee is kept as a bank guarantee. That is not an indebtedness. All right. So one has to keep that in mind for exam purpose. Otherwise, confusion comes. This is very often done in different types of, audit. Like it could be especially in case of internal audit, which goes on for a year, more than a year. Appointment is given for 2 years. So EMD is taken, earnest money deposit is taken, some bank guarantee is taken, which will be released only at the satisfactory conclusion of the work. EMD is generally released immediately after you get the job, but bank guarantee is released only on the satisfactory completion of the professional assignment. So that is not indebtedness. And so if you have taken any advance in the form of for expenses or for audit fee also, that is not also indebtedness. Okay. Last one, directions in case of unjustified removal of auditors. Unjustified removal for auditors. Okay. So, mention of the institute in practice shall follow. That we should follow directions given by the council on appropriate committee on behalf on any of them to bring them to the income when they are bringing in incoming auditors, not to accept the audit appointment as an auditor in case you feel that the retiring auditor has been removed or he has resigned in an unjustified manner. Okay, he has been removed in an unjustified manner. He has been forced to resign in an unjustified manner. So you have to keep that in mind. And in such a case, if a member in practice is taking up the audit appointment, it will be a misconduct on his part, vide Chapter 11 of the Council guidelines. Okay, so that would be all. Let me see. I will take you through the conclusion now. This I explained. So in summary, we will have this is the professional misconduct schedules, which gives all the clauses meant for the members in practice and in service and other misconduct applicable for all the members of the institute, which we explained in the last 3 days actually, including today. And I hope this is big enough just to bring to your notice, which we discussed on day 1, that is the flowchart of the disciplinary procedure mechanism. I mean, just remember for your exam purpose that if a member is, whether in practice or in service, by his conduct, he is guilty of a misconduct and is falling in any of the clauses in part in the first schedule, it will be, and he is guilty. He is guilty of a misconduct, vide clause, any of the clauses of the first schedule, it will be referred. The matter will be placed to the Board of Discipline. This you need to remember from your exam purpose. The matter will be placed to the Board of Discipline. Next is, if a member, whether in service or in practice, is guilty of a misconduct, vide the clauses of various parts in second schedule and also of first schedule, the matter will be placed directly to the disciplinary committee. It straight away goes to the disciplinary committee. So it is very, very serious in nature. It goes to the disciplinary committee, and then if he is, after going through a member is always allowed to present himself to prove his point of view that he is not guilty. After all these, if he is proven to be guilty, he is, 3 things that happens is he's let off by giving a warning, reprimand, or if it is a serious, very serious in nature, cannot be pardoned, his name is permanently struck out from the member register, and he is fined up to a maximum of rupees 5 lakhs. Okay, if he is still having business. So that's all about the Code of Ethics, Professional Ethics. So if you have any question, I thank you all very much for your patience hearing. Now if you have questions, I'll take that, and I have some case studies also. I will put it up. I will not paste my. Okay, you.
Ma'am, remove thank you slide.
I'm just reading. A big question has come: whose salaried employment under a chartered accountant in practice or a firm of such. Regulation 43 says that a member who is in salaried employment under a chartered accountant in practice or a firm of such chartered accountant shall not be eligible to train article clerk. Are you talking of salaried employment? Who is a chartered accountant? Deemed to be chartered accountant, you are right. You are saying, Rahul, you are saying correctly that yes, deemed to be a chartered accountant is a member of the institute who is working in a CA firm. Yes. So he is said to be deemed to be in practice for taking the articles and training purpose also. Yes. But in 43 you were saying that he is a member salaried employment under a chartered accountant in practice. So are you saying that the salaried person is a chartered accountant? I don't think there is such confusion. If he is not a chartered accountant, it cannot be taken as no article can be taken in his name. No, it can be taken in his name only. He is a chartered accountant. Okay. Since no more questions are there, what I'll do is I'll just stop the sharing for 1 minute, and I will put up another the case study. Can I put up the case study, Karuna?
Yes, ma'am.
Okay. Just. Yeah, sorry. So let's look into some of the case studies. Let's look into some of the case studies. and let's answer. Get an answer. Try to identify the answer, please. Mr. Zaid, a practicing chartered accountant, is a statutory auditor of a state government department. He has been asked to deposit a certain percentage of audit fee as recovery against the administrative charges incurred by the department. Will Mr. Z be guilty of misconduct? Can you please answer, students? Will he be guilty of any misconduct? So which clause we are referring to? Can you identify? Which clause this is referring to? Basically, as I told you, the way to answer is to find out the clause. It is first try to identify the clause, whether he is guilty, and then try to match it with the clause. It will come to you that he is guilty or not, and then try to find out which clause it refers to. Okay, I will answer. He is not guilty. He is not guilty because clause 2 part 1 of the first schedule allows a member in practice to pay, a percentage or of the fee, which is basically will be used as a recovery against the administrative charges. That the auditors are eating, they are making arrangements for their tea, their coffee, their other administrative charges, say stationeries and things like that. It is possible that in a government company they might say that we will not give you free. This is generally not done, but it is possible. They might say that we will incur a big, this is a big expenditure, and you have to bear for it. You put it in your fee. That's no problem. You can have a consolidated fee where you can build in this cost. But as we are making the payment from here, giving you all the details, all the stationery and food from here, we will take the money from you. We will take the money from you, and you please deposit us as so much percentage of the fee. So there it is all right that clause 2 says that we cannot pay or agree to pay a percentage of the audit fee or percentage of the profit. You remember, students? So, if we are doing this, we are paying a percentage of our fees. So you might say that, well, here Mr. Z is actually guilty of such misconduct. But there are some cases where he will not fall under this guilty of this misconduct, and this is one of such cases where it is being actually taken as a deposit for the administrative charges incurred by the department. Okay, so he is not guilty of any misconduct under the clause 2 part 1 first schedule. ABC and Associates, a partnership CA firm, sponsored a trophy given as a prize for a game of football. The sponsor name was inscribed on the trophy as ABC and Associates Chartered Accountant. Oh, I'm so sorry. Chartered Accountant. Will the firm be guilty of misconduct? Can any one of the students answer, please? I have given some case studies from first schedule. The next day I will probably put up some case studies for a second schedule too. Can we have some answer? No answer? Yes, he will be guilty. Yes, he will be guilty. He'll be guilty under clause 6 part 1 first schedule. Okay? Because of the name chartered accountant. If he had only mentioned ABC and Associates, that would have been good enough. Okay, that is allowed. That is allowed by the Chartered Accountants Act, the first schedule. But because he has used the word ABC and Associates along with that, put a suffix chartered accountant, that is giving rise to what? 6 is solicitation advertisement, right? So you cannot solicit, you cannot advertise, right? So he is guilty of misconduct under the clause 6 part 1 first schedule. Next case study. Mr. Mask, a very senior and distinguished member of the institute, joined XYZ and Associates, a practicing CA firm, after his retirement from a reputed multinational company where he was a CFO. The firm sends mails to several companies, including its clients, giving in detail of Mr. Mark's background and achievements. Will the firm be guilty of misconduct? Okay, answer good. Yeah, it can be 7 also. Rahul, I do not disagree. It can be 7 also. But you need to explain why. If you explain it correctly, I'm not saying, I'm saying only 6, but you can also say. That's why when I spoke, I said 6 and 7. Yes, it can be. Solicitation and advertisement, yes. But you need to explain, okay? What about this? Will he be guilty? Yes, it will be guilty. Yes, here the firm will be guilty because it is also giving rise to advertisement, solicitation. Okay? Not only to its clients, but it is also being given generally to everybody. As long as it is written, as long as it is only written that this person who was a CFO in so and so company and he has joined in our firm as a senior member of the senior partner of the firm, one of the senior partners of the firm, that is enough. Okay? That he was working there and all, it was not necessary. So, but and then also talking about his achievements and all are actually giving rise to misconduct due to solicitation and advertisement. It is not correct. So he is also guilty of the under clause 6, clause 7. Yes. I think this is also simple and which I explained to you also. A chartered accountant, while giving an interview, handed over a biodata giving all the details of his, not only the achievements but also the firm which he associated with. He is absolutely guilty of misconduct under clause 6. Okay, part 1, schedule, first schedule. A chartered accountant in practice is also an advocate. He is also an advocate, which he is being, and he has writing in the visiting card his designation as chartered accountant and advocate. Will he be guilty of misconduct? Will he be guilty of misconduct? He will be guilty of misconduct under clause 7 because he cannot use both. He cannot use both. Either he uses chartered accountant or he uses only the advocate. He might write, advocate becomes a designation that he practices. But if he has given he has only given the degree that he is an NLB, that is allowed because the Bar Council is being accepted by the Chartered Accountants Act, where it is saying that you can, if you are taking any degree from this is acceptable. From these are the bodies, professional bodies, that's acceptable. Under that regulation 53, that's allowed. But you cannot write the designation. Advocate and LLB is not same. Okay? So because only thing what we can, member can write is the chartered accountant. Okay? So that's allowed. But he cannot write advocate. He could have written LLB or things like that. Because he has written advocate, he is guilty of misconduct. Okay, under clause 7. The last one, a chartered accountant in practice acquires a proprietary firm by purchasing the goodwill from the wife of the deceased proprietor. He also agrees to pay a profit share to the widow. Because I just put up this because we didn't discuss in detail about the goodwill, how the goodwill will be. Yes, Srinivas, you are right. So, in detail we didn't discuss goodwill, but that's why I thought let me put up a case study here. It's a proprietorship firm. It's a proprietorship firm, and the proprietor expired. His wife sold the goodwill, and the chartered accountant who acquired it, he not only paid the deceased wife the value of the goodwill, but he also agrees to pay a profit share of the proprietorship firm. Is he guilty of a misconduct? Please write this. The next class I'll put up some more case studies for second schedule. I wanted you to go through the second schedule first and then prepare yourself. I'm sure you will prepare yourself because second schedule by now you understand it is quite complicated, a serious affair. So prepare yourself. I will give you some case studies to start with. Then we will move on to some other chapter. Okay, I'm waiting for this answer. Yes, students? Is he guilty or not guilty? I think it is taking little time to come. He is guilty. He is guilty because it's a proprietorship firm and you cannot in a proprietorship or in a partnership firm. It could be a partnership firm also. You cannot share. You cannot share, a part of your profit with a non-partner. But he cannot share profit. Yes, Srinivas. Very good. Very good. That because the widow is not a partner in the firm, and that's why it is this CA will be guilty of misconduct under clause 2, part 1, first schedule. Yes, that's about it. So, with that we come to the end of the professional ethics chapter. If you have any questions, you please share the questions. I will definitely answer. I'll definitely answer through the board of studies. Anything else? Any question?
Ma'am, we cannot share profit, but just interlink it with they can sell their goodwill.
Yes, they can sell their goodwill. That's what we are saying. Purchasing the goodwill from the wife of the deceased, he also agrees to pay share. The misconduct comes from there. Here the misconduct is coming from that he also agrees to pay a share of the profit to the widow. That he cannot do. Of course he can sell. Of course the widow the chartered accountant can buy the goodwill and pay the price of the goodwill to the deceased. That's correct. There is no misconduct on that. But over and above the cost of the goodwill, he is also willing to pay a share of the profit to the widow. That's a misconduct. Under clause 2. Because that widow, we are not mentioning whether the widow is here. She's not a partner. Is it not?
I think time is indicating us to wind up, and we can wind up.
Okay. So if you have any question, dear students, you can post it. I will answer them. And if not, thank you very much. Thank you. Then
And
we can
we'll be
wind up.
there on Tuesday.
Sorry?
Tuesday morning, 7 a.m.
Yes, I'll be there Tuesday morning, 7 a.m. Yes. And I will start with some case studies from second schedule. Okay?